Hi, my name is Shani and I am going to present question 1A until D. Before I start presenting question 1A, I am going to explain about consideration transfer. So, the first one is consideration transfer of Joy Direct in Heaven. Joy acquires 30% shares in Heaven on 1st July 2018 with retained profit of 109 million and other component of equity of 45 million. On 1st July 2019, Joy acquired additional shares of 30% in Heaven. After the increase in shares, retained profit and other component of equity increases to 245 million and 52 million respectively. There is also additional ARR at the date of acquisition. Next, Rose acquires 70% direct in Heaven, resulting 30% in NCI. Total of acquisition of Joy in Heaven from direct and indirect is 52% and NCI 48%. But last but not least, Joy acquired 40% of shares in Night Berhad. Now, let's move on to question 1A, calculation of goodwill on acquisition of Rose Berhad. The consideration transfer from Joy to Rose is 500 million. The fair value of previously interest is 504 million. This amount is calculated by 30% times with 800 million times with 2 ringgit and 10 cents. Since the NCI is calculated as its fair value, therefore, the amount of NCI is 672 million. After we finish calculate the consideration transfer and the NCI, we must minus with the fair value of net asset at the date of acquisition. So all of these amounts are from the table that I showed earlier. However, the ARR must add 2.4 million and 5.5 million, which are the ARR of land and building. Hence, we will get the total of 1224.9 million. Then we will get the goodwill amount of 451.10 million. Since the additional information number 9 states that the goodwill must be impaired by 10%, therefore, we must minus the impairment with 45.1 million. Then we will get the net goodwill of 405.99 million. Next, we are going to calculate the gain on loss on the virtual sales of ordinary shares on Rose Berhad. Fair value previously interest is 504 million. We'll minus with the share of profit of associate to get the gain or loss on the disposal of associate. Cost of investment of 300 million is the consideration transfer of Joy to Rose Berhad at 1st July 2018. So to get the share of profit of associate, we must minus retained earnings on acquisition of associate of 109 million from the retained earnings before increase of shares of RM 245 million. And then we multiply with 30%, which is the interest in Rose Berhad on 1st July 2018. That amount then plus with the cost of investment, and then we minus from the fair value previously interest. This will result in gain on disposal of associate of RM 163.2 million. Moving on to question 1C, calculation of goodwill on acquisition of Heaven Berhad. So the consideration transfer of 75 million is the consideration transfer from Joy to Heaven. Then we must plus with the indirect consideration transfer of RM 420 million, which is the consideration transfer from Rose to Heaven. The amount of indirect NCI is calculated by 40% times with 420 million. As for direct NCI, 48% will times with 500 million and the fair value of ordinary share of RM 1 ringgit and 70 cents. Hence, we will get the amount of 735 million. Next, we will minus the fair value net asset at the date of acquisition amounting 691 million. This will result a goodwill of RM 44 million. The last question that I will be explaining is question 1D, bargain purchase on the acquisition of Night Berhad. With consideration transfer of RM 300 million and minus with the fair value net asset at the date of acquisition, the retained profit is calculated by adding the balance PT and the profit for the year for 6 months. Hence, we will get a total of 823.5 million. And then times with 40% interest in associate, resulting in RM 329.4 million. Therefore, we will get a bargain purchase of RM 29.4 million. That's all from me. Thank you. I will pass the next presentation to the next presenter, which is Siti Mariam.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Mariam Murshidi, student ID 2020620784. For today's presentation, I'm going to explain on how to prepare consolidated statement of profit or loss and other comprehensive income for Joyce Group for the year ended 30th June 2021. First thing first, we need to determine which company will be in the CSOPL OCI for the Joyce Group for the year ended 30th June 2021. If we refer to the slide, we can see that Rose and Heaven will be in the CSOPL OCI for Joyce Group for the year ended 30th June 2021. Let me explain first the treatment for additional information that related in CSOPL OCI. There are two information in additional information number 1. First, Rose sold to Joy at cost plus 25% for the inventory of RM25 million. Later, in CSOPL OCI, we will eliminate this amount of RM25 million, which is sales price of the inventory, in the revenue, also in the cost of sale. Since Rose sold inventory to Joy at cost plus 25%, there will be URP. The URP that we got is 1 million. So, we will need to add it to cost of sale. For the second information in additional information number 1, there are also URP in opening inventory of Joy, which is sold by Rose. We also need to eliminate this amount of RM2 million in the cost of sale. For the working tree, it is additional information number 8. Since it is mentioned that ordinary share dividend and preferred share dividend are declared and already paid, we need to eliminate the amount of ordinary share dividend income from the investment income, since the dividend income is come from their subsidiary and intercompany transaction. The total dividend income received from subsidiary should be calculated total percent of direct interest parent in subsidiary times by ordinary dividend paid. So, we will get the amount of dividend income of Joy from Heaven is 1 million, while Rose from Heaven is 7 million. For the working for, this is information during second acquisition of Rose, which is from associate to subsidiary. It is mentioned that there is a plus on revaluation of building of Rose of 5.5 million. Of course, there will be under provision of depreciation of RM 0.44 million. Later will be added to the operating expenses. For the working 5, it is related to acquisition of Heaven during the year. During that time, there is internally generated brand being recognized, which is RM 50 million. There will be amortization of 1.5 million, and later also will be added to operating expenses. For working 6, it is come from additional information number 7. There will be additional amount of 0.25 million in finance cost, since during the year the company issued 20 million of 5% RPS. If we refer to the working 6, 0.25 is interest payable for the year ended 30th June. Revenue for Joyce Group is 879, which is 550 plus 244 plus 110 minus by 25. 25 is referred to the amount in working number 1. For the cost of sale, we got 424, which is 290 plus 110 plus 50 minus by 25 minus by 2 and plus by 1. RM 25 million and 1 million is come from working 1, while RM 2 million is come from the working 2. We got gross profit of 455 million. The amount of investment income that we got is 202.4, which is the adjustment is related to working 3. Gain of disposal need to be eliminated of RM 2.5 million. This is because during the year Heaven sold a plant to Rose for RM 12 million, while the carrying value of the plant only RM 9.5 million. We need to eliminate the amount of RM 2.5 million, which is the difference between carrying value of the plant and proceed received. For the total amount of operating expenses that we got is 153.44. The adjustment of 0.44 and 1.5 is come from working number 4 and working number 5. RM 0.5 million we got from additional information number 2, where the amount of gain of disposal, which is RM 2.5 million, need to divide it by the remaining useful life. We will get the over provision of depreciation, which is RM 0.5 million. The amount of finance cost that we got is 7.75 million, which is the adjustment is related to working number 6. We need to minus impairment of goodwill during acquisition of Rose on 1st July 2019, which is RM 45.11. Last but not least is we need to add share of profit from associate and bargain purchase of associate, which is from 9. After deducting taxation of RM 196 million, we got profit after tax of RM 318.6 million. In order to calculate total comprehensive income for Joyce Group, we need to add surplus on revaluation and increase in fair value of investment. The amount of surplus on revaluation that we got is 15.9 million, which is 5.5 and 2.4 is related to acquisition on Rose during 1st July 2019. We got total comprehensive income of 337.5. Next step is we need to determine profit after tax attributable to the parents and NCI. First, we will calculate for the NCI portion. We need to determine profit after tax for each subsidiary, which is Rose and Heaven, minus by any unrealized profit of inventory, plant, also not to forget to minus under provision of depreciation, and added over provision of depreciation. We will get profit after tax available to ordinary shareholder. We need to multiply by NCI interest in order to get profit after tax available to NCI. We need to add back the amount of preferred share dividend. So, how to determine the amount of dividend entitled to NCI? The amount of NCI entitled is 0.8, which is holding NCI in PS, times by preferred share dividend paid. Profit after tax attributable to the NCI is 65.18, where the total NCI in Rose added with the total NCI in Heaven. We get profit after tax attributable to the parents is 253.42. I will pass this presentation to the next presenter.
Assalamualaikum and hi, my name is Nur Alia Binti Zamri. I am going to continue for question 1F, which is consolidated statement of changes in equity for the year ended 30th June 2021 for Joy Berhad. This is the schedule balance brought down and the consolidated statement of changes in equity for Joy Berhad. As you can see in these two tables, there will be 4 columns which are group return profit, group asset revaluation reserve, group other component of equity, and non-controlling interest. Before we calculate the consolidated statement of changes in equity, we have to prepare the schedule first in order to get the figure of balance brought down for each column. In the schedule of balance brought down, we have to include all the transactions that have been made by the company before the current year. In the schedule, we calculate the figure of the transaction and apportion it according to percentage of share that they have acquired. The NCI value at the date of acquisition of Rose and the NCI value of preference share we put under the NCI column. For gain on disposal of associate, which is RM 163.2 million, we put under the group return profit column. To calculate the post-return profit for Rose, we take the balance brought down for return profit of Rose, then minus the return profit at the date of acquisition, and also minus the under provision of depreciation for building. We have to apportion the total of RM 48.78 million to group return profit and NCI, followed the percentage share of Rose, which are 60% and 40%. For return profit of Joy Berhad, the balance brought down for return profit have to minus with the impairment of goodwill amounted RM 27.07 million and get the post return profit for Joy Berhad. We have to apportion the impairment of goodwill to group return profit and NCI. For asset evaluation reserve of Rose, balance brought down minus ARR at the date of acquisition minus ARR building and land to get post asset evaluation reserve. Then apportion to group ARR and NCI column. Then we bring the total of each column to consolidated statement of changes in equity and known as balance brought down. Okay, next we move to consolidated statement of changes in equity. We transfer the figure from the schedule of balance brought down for balance brought down in consolidated statement of changes in equity. For profit for the year, We just take the amount from the calculation of profit after tax attributable to parents and NCI. For surplus on revaluation of brand, building and land, we put under the group ARR column. We just take the portion for NCI only for ordinary dividend paid by Rose and Heaven and put under the NCI column. For preference dividend paid of RM50 million and ordinary dividend paid of RM40 million, we just take the figure from the equation given. The preference dividend paid by Rose amounted RM24 million, which RM30 million times 80%, we put under the NCI column. For return profit of Joy Berhad, the balance brought down for return profit have to minus with the impairment of goodwill amounted RM27.07 million and get the post return profit for Joy Berhad. We have to apportion the impairment of goodwill to group return profit and NCI. For asset evaluation reserve of Rose, balance brought down minus ARR at the date of acquisition minus ARR building and land to get post asset evaluation reserve. Then a portion to group ARR and NCI column. Then we bring the total of each column to consolidated statement of changes in equity and known as balance brought down.
Hi, my name is Nur Atra Shuhada binti Harun and I will present our consolidated statements of financial position as at 30th June 2021 for Joy Berhad Group. This is our statements of financial position. First, we start with the non-current asset. For property, plant and equipment, balance in the statement of financial position in the question, then we add with the revaluation surplus of land and building amounted 2.4 million and 5.5 million. Under depreciation of 0.44 million of building need to be minus. Then there is adjustment in the additional informations number 2, which are over depreciations of plant amounted 0.5 million that needs to add and minus with URP profit amounted 2.5 million. Therefore, the total of PPE would be 2325.46 million. For investment in subsidiaries is 0. Then for intangible, there is adjustment which is we need to add intangible assets of 50 million and is under amortizations of 1.5 million. The total of intangible asset would be 410.5. For other investment, there is no adjustment. Therefore, the total will be 20 million. For goodwill on associated, the amount of 44 millions and 405.99 are brought from working in the question A, 1A and 1C. For investment in Night Berhad, that will be explained in the working tree. This is our working tree carrying amount of investment in associated. First, consideration transfer 300 million together with the share of profit minus with ordinary dividend paid for the year. Then we add bargain purchase of 29.40 million. So the total carrying amount that would be brought in the statement financial position is 340 million. Next, we go to the current asset. For inventories amounted 349 millions, we adjust with the URP inventory of 1 million and unrealized profit of 2 millions in the additional information number 1. For account receivable, we need to minus 12.5 millions, which is coming from the half of invoice that Joy Berhad paid to the Rose Berhad. So the total account receivable is 592.5 millions. Bills receivable need to be deducted with the 6 million from additional informations number 4. Balance of receivables. So the total would be 169 millions. For bank, we need to add 20 millions that we got from the additional information number 7 that arise from redeemable preference share. So the total would be 1080 millions. Loan due to the Rose needs to be 0 because it is transaction between parents and subsidiary. Cash in transit is 3 million due to Rose Berhad paid to the Joy Berhad. Therefore, the total asset will be 5739.45 million. Next is equity part. Ordinary share capital of 2,000 needs to be debit with the acquisition for the year, which is 75 millions. So the total is 2075 millions. 10% preference share capital is from the parent account amounted 500 millions. For the retained profit, asset revaluation reserve, other components of equity and non-controlling interests are coming from balance BD of statement changes in equity. Next is non-current liability. 5% debenture are 550 millions and 5% redeemable preference share, which is 20 millions from additional information number 7. For current liability, account payable need to be deducted with the 12.5 that coming from half of invoice that Joy Berhad paid to the Rose Berhad. So the total would be 375.5 millions. Then bill payable also need to be deducted as per bills receivable, which is 6 millions. So the total would be 96 millions. Loan due to Joy Berhad would be 0. And lastly, accrued interest paid that coming from 5% redeemable preference share is 0.25 millions. So the total equity and liability is 5735.32 millions. That's all from our group presentation. Thank you and Assalamualaikum warahmatullahi wabarakatuh.